G'day, fools. Scott Phillips here, the Motley Fool's Chief Investment Officer here in Australia. And I'm bringing you another in our series of Stocks in Focus. Now, if you've only watched a few of these, you haven't watched any of them, the reminder is, or the new information is, this is where we sit down and talk about companies that are widely covered, widely owned, widely discussed on the market, where the businesses that we know you like, you own, or you want to know about. Often we take ideas from you, by the way. So if you have got ideas of things you want us to cover, drop it in the comments down below so we can do that for you. But in the meantime, we've chosen a business this week, and it's presented by Motley Fool gun analyst Kate Lee. G'day, Kate. How are you?
Hi, I'm very good. I'm happy to be reopened in Sydney.
Oh, yeah, mate, about time. Hey, so we're recording this on Tuesday, the 12th or 13th? 13th and 12th today. And we are one day into something of a reopening. Not quite there. You're not 80% just yet, but man, after the last, 3 months, we'll take what we can get. Thus far, a few less restrictions, a little bit more freedom, at least for now, right?
Yes, certainly.
All right. Now, that's date stamped. That's actually important, Kate. So thank you for doing that, because if you're watching this video meaningfully after the middle of October 2021, of course, circumstances will have changed. So we try and make these videos as evergreen as we can. We can't make companies stay in stasis. We don't know what's going to happen in terms of customer wins or losses, pricing of products and materials. All that stuff can change. So as always, remember that the comment is, or the conversation we have is current only as of recording. We will try and update some of our most favored stocks semi-regularly, so you get a sense of kind of where we're up to now. But this is a point in time, and just keep that in mind if you can. Right, Kate, you're going to talk to us about a fascinating company that I know a little bit of, but not as much as I probably should. So I'm super looking forward to this conversation. You're talking to us about Lynas. The ASX code is LYC. Now, this is a business that's in the business of rare earths. For those who are a little bit old like me, with a little bit less hair, oh, well, I've got no hair, but you know what I mean, with less hair than other people, this used to be called mineral sands, but I think rare earths kind of got sexier and sounded like it was kind of somehow more valuable, right? Just explain to our viewers, if you would, what Lynas does, what rare earths are, what its operations are. Just give us the lowdown on the company called Lynas.
Yeah, so as you pointed out, it's a mining company, and then they mine rare earth. This is the largest rare earth producer outside of China, and including China, it's the second largest in the world.
Oh, wow.
And
Okay.
I should probably start with explaining what's the rare earth, right? So rare
Please.
earth is the term for 17 element. So it's just like a minerals, like gold or iron ore or etc. And then there are 17 of them, and then they are used in various product production of the products. But then among these 17 elements, there's this thing called neodymium. So it's just
I'm glad you're
remember
saying that,
that
not
this
me.
is the ND. ND and PR, which are the key elements to make high performance magnets. And this is important because these magnets are then used to produce the electric vehicles or smartphones, or even some of these military use radars and stuff. So those are the key materials. And Lynas owns the Mount Weld deposit located in Western Australia. And this mountain and this site is one of the richest major rare earth deposits in the world. The other major deposit site is in California in the US, and that's owned by a company called MP Materials, which is also listed in the stock market in the US. But they do sell 90% of its product sales back to a Chinese company who happen to be their shareholder as well. So you could see Lynas as a quite substantial sort of position in this rare earth space.
That's so important, Kate. And it's one of those stories where you think about the story of these makers of materials that we otherwise don't necessarily pay all that much attention to. We talk about iron ore when it comes to China, coal, of course, both those go into steel making, metallurgical coal in particular. Think about gold, we think about some of these big companies. And then you've got businesses like Lynas that there's 17 minerals, as you talked about, 17 elements that go to making up the story of some really, really complex and super important machines, device. I mean, I've got a phone in front of me, a laptop in front of me, a camera over there. A lot of this just wouldn't work without these minerals. So we don't know them. I can't even pronounce them. And yet they are so vital and so valuable in the supply chain. I guess that's one thing, right? But that's kind of true of all materials. I guess, like other materials, it's still a supply and demand game, right? The economics of this industry, yes, we know they're important. Yes, we know they're needed. But if there's a lot of supply and not much demand, the price goes through the floor. If there's a lot of demand and not much supply, the price goes through the roof. Operationally, there's only so much people like Lynas can do to actually control that, right?
Yeah, that's precisely correct. And then I'll probably mention that as one of these, cons for this investment. But having said that, there are so many materials, even when it gets to electric vehicles alone, right? So there
Yeah.
are lithium, there are cobalt, there's copper and whatnot. But then I must say, this rare earth has its critical, say, like their market position. So I would say, like, supply demand, in terms of supply, it's not as easy to be commoditized, like in
Okay.
the case with lithium. So it does have some support to say, but you're 100% correct. At the end of the day, it's a mining company that will be controlled by the market price, which they don't have any impact on.
Yeah, fascinating. Hey, so let's get to the investment case. We kind of started talking about it. I led you down that garden path. So I'll stop myself and I'll go back specifically to the questions we ask all of our analysts who appear on this series. Let's talk about the company. Let's talk about the bull case. If we're going to say, right, here's why you should buy Lynas. If you're saying, Scott, you need to buy Lynas today, and here's why you should buy it, what would the bull case be for an investment in Lynas?
I think the biggest point for the investment is that this company is the largest commercial scale operation outside China. And then this company also has both upstream and downstream facilities. They have this, so they not just doing the mining stuff, but then they send these minerals and elements to their Malaysian facility to further process.
Right.
So they've got this sort of integration there. And I mentioned the rare earth, the importance of it at the moment, right? Without rare earths, you can't produce those high performance magnets, and then you can't produce all these electric vehicles and smartphones and whatnot.
Yeah.
And then the China supplies the vast majority of this demand globally. And in 2020, China accounted for nearly 80% of global rare earth production. And the Chinese dominance is even higher when it comes to that that important, difficult to pronounce ND and PR magnets. So I'm not gonna try to pronounce the full name, but that's
Me either.
the jewel of the crown, right?
Yes.
And
Yeah.
obviously, China has been using this as a sort of a weapon, and
Yeah.
it's not new story. Back in 2010. China actually restricted export of rare earths to Japan, and which became a big sort of issue back then. And then from this background, obviously it's natural both China and US, from their strategic point of view, make this rare earth element, and then the production of it, and then having a secure supply of that, make their priority in their strategy. So the US is taking action, and then they're trying to build their rare earth supply chains domestically, if possible. If not, among US allies, including Australia, obviously.
Yeah, right.
So it's not just the US, the European companies. If you think about all these electric vehicles or smartphone makers, obviously there's a need to diversify their supply chains. So that's the biggest strength of this story. And then second point is the COVID impact. As in, I mentioned that they have downstream facilities in Malaysia. And if you recall, Malaysia has been hit the hardest by especially the second wave and third wave of the pandemic, which means their production base right now is operating at just at about 75% of its usual production. So I do believe there's a little bit of for the lake of the recovery, coming back from the pandemic. And I want to point out, it's not just the Lynas, their own production capacity. it's actually impacting the overall supply chain of the automotive industry. So I think if as that is being restored, I think they can benefit from both from the industry and from their own production base. And then third point is that more companies face with issue, but they are actually building new processing facilities for the downstream process in Western Australia, and then that's due to completion in July 2023. So that there's an added catalyst there in terms of their capacity. I think that's more like they're trying to move back some part of that Malaysian business onshore. But I think it's regardless of that, that's a good news, because you'll be, that means that they will be next to each other, which could bring in some cost advantage there as well. Also, there are a couple of other catalysts in the US. In the US, they're actually working together with the they are actually part of a US joint venture to build processing facilities in Texas as well. So as I mentioned, the US government, they're trying to build a domestic supply chain of the rare earth. I think these companies tend to benefit from there as well. So there are plenty of positives, and also valuation-wise, I don't think it's that expensive, as compared to other electric vehicle plays, which are at lofty valuations as well.
You've made a very compelling bull case, Kate. So I'm almost convinced. I like the idea of Lynas being the biggest non-Chinese opportunity, as you say, the ability to kind of ramp back up in terms of production volumes, bring it to WA. Plenty of opportunity. I can absolutely see that the trend for demand also continuing to rise as we move towards more electric products, whether they're vehicles or phones or computers or whatever else. But I also recognize every investment has a bear case. So you've almost convinced me to buy. Now try and flip me over entirely, mate. Tell me why I shouldn't buy shares in Lynas tomorrow morning.
The very first point is you already mentioned, right? The price risk. As in, just with any other mining businesses, there are many factors that are outside of the company's control. And obviously the price, as in the element price of that rare earth, is the key risk. Their cash flow and profitability will be significantly affected by the market price of the rare earth products. And for now, that NdPr oxide China domestic price nearly doubled actually over the last year, from $36 US dollars per kilo to 65 in FY21, and now it's at around 70 US dollars per kilo. So you could see there's a definitely, for obvious reasons, right? I mean, the demand is solid. There's this geopolitical risks and whatnot. And some analysts are actually forecasting the price will double from here in the next 4 to 5 years. Things are going well for now, and it's moving so on the back of strong demand. But it doesn't change the fact that business remains to be a price taker rather than a price setter. And this might be impacted by other political reasons. For example, back in the early 2000s, China artificially lowered the export price of rare earths by increasing domestic production massively. And then that was actually targeted to have an impact on this California-based mountain pass, which I mentioned just earlier on, in 2002. Actually, that move led to a bankruptcy of that company who used to operate in the mine. So there is certainly a risk, although the demand is strong, and I for now, I don't know, what or when these risks will emerge, but certainly there's a price risk. So that's the first risk. Secondly, there are some environmental issues, because as they produce these rare earths, it does produce low scale. It's not harmful to human, but low scale radioactive materials. So that's actually one of the reasons why Malaysian, there has been some protest from the activists, and then that's one of the reasons why they want to bring that back on Western Australia. There are studies that it's not harmful to humans, so I don't think it's a major risk. But with these environmental issues, there could be some other risks down the path, and then they may actually, if that have an impact on their this production building of the production facility in Western Australia, that may pose some risk, which for now I think the possibility is unlikely, is very low, but no one can guarantee that the risk is zero. Lastly, the competition is there. You mentioned supply side risk. The Northern Rare Earth, which is the largest Chinese, right, the global leader in that rare earth supply, one of the leading suppliers, which is located in China. They're actually doubling their production within the next 3 years. In Australia, there's another listed company called Arafra Resources, ASX ARU, who is developing the Nolans project in Northern Territory. Also, I mentioned that MP Materials in the US, currently they are selling most of the production to this Chinese company, but they are expanding their production base, and they are expanding down to the other downstream production facilities. So there are some increasing competition from all directions as well. And also, I would say that the biggest risk is the change of the possibility of the new technologies. So as I mentioned, there are some environmental issues, to a lesser extent with this production of the rare earths. So if that prompts to other new ways to make those high performance magnets without using as much rare earths as is now, then that may have an impact on the demand side. These risks are, again, for now, very low, but those are definitely big risks if they does re-emerge. I think I mentioned all. So those are the major risks that you need to watch out for.
Kate, those are a remarkably thorough analysis of the company. Thank you so much for putting that together. There is a lot to know about this industry, and you've absolutely nailed it, both the description of the business and also those risks and potential upsides. I'm not sure which way you're going to go here. Sometimes when the team's on here, I'm pretty much sure by either I know their views in advance or they've kind of let the cat out of the bag during the review. I don't know, mate. I'm really stuck here, but you've given us a great set of reasons to invest and a great set of reasons not to invest. Now, for those people watching here from their homes and offices, at the Motley Fool, we believe if you can't beat the market, you should buy the market, right? So if you want to just get the market return, buy a really low-cost index ETF. Go fishing, go to the shops, do what you want to do. Now, we can get out of the house as well, and get the market return, which is a perfectly fine thing to do. If you're going to buy individual stocks, for the most part, maybe income aside, but for the most part, we think you should be trying to find those companies that are likely to be market beaters because you want to get better than the market return, right? Otherwise, as I said, just buy the index. So all that remains for me, Kate, is to ask you the question. I literally don't know which way you're going to go. So it's fun for me as well because we don't discuss this before the taping. So, Kate, over the next 5 or so years, do you reckon Lynas is a market beater, or do you reckon it's going to lag the market? Is it good enough? Is there enough upside to buy the shares, or should you leave them on the shelf?
I almost want to say that I don't know, but because I'm just saying, things are going things are going very right for now. But the risks, as I said, right, if one of these risks does happen, then it has a big impact. Net, I would say I am positive on this one that this company could and likely is likely to outperform the index. If we say index is increasing maybe on average 7% per annum, I would say there's a decent possibility that Lynas could rise. The gain share price more upside bigger than 7%. Sorry for my. So the reasons are for now, these high performance magnets are necessary to produce all these important products.
Yeah.
And you can't produce these magnets without certain rare earth elements. So that's the facts as of now.
Yeah.
From this background, as I briefly mentioned in the beginning, I would say it is still in a better position than some of other commodities. Right. And these US or European companies, the need to diversify their supply chain is obviously a short term. I mean, is a fact. Is true for the coming a few years. There are other companies who are developing new technologies, but it will take some time. And also, likewise with the supply chains, this company already have its second largest sort of market leader position globally, and it does have all the downstream facility ready and going. Um, so I think it save them some time, like a couple of years at least, until these new companies does catch up. So I would say with maybe 3 to 5 year time frame, I would be leaning towards it, on the positive side with this one.
There you go. I didn't honestly know which way you're going to go. So Kate saying it's probably a market beater in her view. Now, as we always say, and as Kate would say, there are risks, of course. We're not guaranteeing anything, but we think on the balance of probabilities, as we do with all our investments, we're looking at the risks and the potential returns and making a call. On this case, Kate is saying it's likely to be a market beater. So I'm looking forward to watching that, Kate, over the next 5 or so years. Hopefully you're right. Hopefully for our viewers and for you and for me, we're all right and we make some money out of Lynas. I don't own any shares, by the way, Kate. Do you own Lynas shares?
I do not own any
Beautiful.
shares
There
in
you go. I want to get
Lynas.
that disclosure out of the way. It's important, obviously, for our viewers that while you're watching what our otherwise biases or skin in the game might look like. We don't own shares in Linus, but Kate thinks that might be a long-term market beater. There you go. Thank you so much for sharing your expertise with us, Kate. I really appreciate the depth of research you've gone to and the thoroughness with which you presented your case. So thank you for doing that. On behalf of Kate, the entire Motley Fool team, and myself, until next time, Fool on.